Franklin Wando is my name. I'm the pioneer of FCL Accountants Tuition Center. And of course, the lead tutor at FCL. I have practical experience in the accountants field and also practical experience in the lecturing industry. I've worked for so many institutions involved in training. And in today's video, we are going to look at the correction of errors and the suspense accounts. In order for you to appreciate today's video, it is very important that you refer to series number 1, which we did, and which is available on the FCL Accountants Tuition Center YouTube channel. I did deliver the lecture on the double entry concept and the common terms used in business and the types of businesses. You also need to refer to the series number 2, which was delivered, and we looked at entering the transactions in the cash book and posting to the ledger and the extraction of the trial balance. In this third series, we are going to look at the correction of errors and the preparation of the suspense account. But it is very important for you to appreciate the types of errors, those which affect the trial balance and those which do not affect the trial balance. So we have 2 types of errors. Number 1, errors affecting the trial balance. Errors affecting the trial balance. Errors affecting the trial balance. Those errors which affect the trial balance can be detected by the trial balance or revealed. So once these errors are made, the trial balance is not going to agree. And these errors are: 1, single entry. Error of single entry occurs when a transaction is entered in one account only without entering in the corresponding account. If that is the case, then the trial balance will refuse to agree. For example, cash sales posted to the cash account only. It means it's not posted to the sales account. That is an example of a single entry error. Number 2, error of casting. Error of casting. An error of casting occurs when there is either an under or overcast in one account only. For example, cash sales of $750, cash sales of $750 entered in the sales account as 705. But in the sales account, there is 750. So that is an example of error of casting. When committed, the trial balance will not agree. So basically, we have 2 types of errors that will affect the trial balance. Then we go to another category of errors. This is errors not affecting. Errors not affecting. Errors not affecting. Errors not affecting. Errors not affecting the trial balance. Not affecting the trial balance. So basically, these errors are not detected or revealed by the trial balance. Even if the errors are committed, the trial balance will still agree. These errors are: one, error of omission. An error of omission occurs when a transaction is completely not entered in an account. There is no debit entry and there is no credit entry. Therefore, the trial balance will not be affected. And such type of an error will occur when the source document has been misplaced and cannot be found. We go to error of original entry. Error of original entry. Error of original entry. Error of original entry occurs when a mistake is made on the source document and it is posted as such to both accounts. The debit account has got the same figure as the credit account, but it is a wrong figure. Source documents are sales invoice, sales purchases, the receipts, the debit note, credit note. Those are original documents. For example, a credit sale of $210. It is written on the sales invoice as 201, and it is posted as such to the sales account and also to the receivable. It won't affect the trial balance because both debit and credit, they have got a wrong figure. Then we go to error of principle. Error of principle. Error of principle occurs when a transaction is posted to the wrong class of account, but either the credit or debit is correct in a wrong account. Very important concept. Error of principle occurs when a transaction is entered in a wrong class of account, but the debiting and crediting is correct. Examples, we have a number of examples here. I'll give 3 examples. Example number 1, cash paid for motor car repairs and maintenance. 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 Motor car repairs and maintenance is entered or posted to the motor car account. That is an error of principle, provided it is also debited. It won't affect the trial balance. Number 2, private expenses entered into the business expenses account. It's debited. That is another example of error of principle. Number 3, Sale of old office furniture credited to the sales account. Old furniture, when we sell them, they are not part of the sales. It's supposed to go to the disposal account, but it is credited to the sales account. That is an error of principle. It will also not affect the trial balance. So we go to another error. We can look at error number 4, error of complete reverse of entries. Complete reverse of entries. Complete reversal. Complete reversal of entries. Okay. This error will also occur where a transaction is posted to the correct accounts, but entered on the opposite sides of those accounts. For example, cash sales. Cash sales. The cash sales here, you credit the cash account, credit cash, and debit sales account. This is a complete reverse of entries because the correct entries were supposed to be debit cash, and credit sales. But now you reverse the entries. Provided there is a debit entry and a debit entry with the same amount, the trial balance will not be affected, but mistakes have been made. Are we together there? So now we have another error there, error of commission. Error of commission. Error of commission occurs when a transaction is entered in the wrong account, but in the same class of accounts. A transaction is entered in a wrong account, but in the same class of account. For example, we have T. Tom and T. Thompson. These are credit customers. Credit customers are found in the sales ledger. That is the same class of account. Now, if a sale was made to T. Tom, but you debit T. Thompson's account, that is an example of error of commission. Since there is a debit and there is also a credit in the sales account, although in a wrong account, there is a debit and credit, and therefore the trial balance will not be affected. That is one example of error of commission. The second example will be paid rent for cash, but entered in the wages account or entered in insurance account or posted to light and heat account. Rent and wages, insurance, light and heat, they are found in the general ledger. Same class of account, but wrong account, and it was debited. That is clearly an error of commission, and it will not affect the trial balance. So now we go to the question here. The question that we have is the 3.2, which I'm sharing on the screen. Your bookkeeper extracted a trial balance on 31st December 20X5, which failed to agree by £210, a shortage on the credit side of the trial balance. Now, I want to teach you a concept here. The amount of the difference in the books is entered in the suspense account, is entered on the suspense account, is entered on the suspense account on the side that has a shortfall. The difference in the trial balance is entered in the suspense on the side where there is a shortfall. So here we go to the suspense. Suspense account. We have the suspense account here. This is the debit. And this is the credit side of the suspense. Difference in books. The side with a shortfall is the credit side, 210. So here you are required to show the journal entries necessary to correct the errors. Now, the journal entry is used to correct the errors, and also it has other uses. The journal entry has the debit and credit side. When correcting the errors, you always start with the account to be debited and end up with the account to be credited. So let's look at the errors. Sales day book had been undercast by 200. First, we look at the sales. Sales account. It has the debit and the credit. It has the debit and the credit. Now, a sales account, you always credit. So if there is an undercast, it means the credit side is less. And since this is a casting error, it will affect the suspense and also affect the trial balance. So the description there will be suspense because it affects the suspense. Suspense, 200. So we have credited the sales account to make up for the shortfall. And therefore, we are going to debit the suspense, and the description should be sales, which will be 200 there. The journal has two sides, debit and credit. You always start with the account to be debited. In this case, it will be the suspense, which you have debited. Suspense, which will be 200. And sales, which we have credited. A journal entry is always followed by a narration, which is a short or precise explanation about the error being corrected. So here we are going to say, being the correction of errors of casting in the sales account. So this is 200. And then now we go to the second error. Sales of 610 to T. Ventura had been debited in error to T. Ventura's account. This is an error of commission, and therefore it will not affect the suspense account or the trial balance, but it needs to be corrected. So there we can create some space there where we can do the accounts. We have this is the accounts. We have the error there is clear. This is Ventura. And this is Ventura. So the mistake was committed here, sales 610. So we are saying, no, this account, this cell is not supposed to go to Ventura, it's supposed to go to Ventura. Therefore, we say, okay, we remove it by saying it's supposed to go to Ventura 610. And we say this error is coming from Ventura 610. That is the correction. We debit the Ventura account $610, and we credit the Ventura, thereby removing it $610. And the narration there will be being the correction of error of commission. Is that okay now? So we can now go to rent account had been undercast by 90. So we can create some space here. We have an error. Rent account had been undercast by 90. So we go to the rent. Rent account. Rent account. Now, rent account is an expense account. You always debit. So if it was undercast, then the debit side was less. So since it's a casting error, it affects the suspense, and the description here will be suspense. Suspense 90. So we have debited the rent account. We are going to credit the suspense, and the description will be rent 90. The journal entry there will be start with the account to be debited, rent account 90, and end with the account to be credited, suspense 90. Being the correction of error of casting in the rent account. Then now we go to discount allowed account had been overcast. So we can create some space there. We have okay, discount allowed. Discount allowed account is an expense and you debit. the debit there, and the credit there. So we are told the discount allowed account had been overcast. So if it is overcast, it means the debit is more. And since it's a casting error, it affects the suspense. To make the correction, you credit suspense. Suspense, how much? 100. So here we have credited. In the suspense, we are going to debit as a result of discount allowed. Discount allowed, there 100. In the journal, we are going to debit the suspense. Is 100. Credit discount allowed. Being correction of error of casting in the discount allowed. Is that okay now? Now we can go to the last error there. The sale of a computer at net book value had been credited in error to the sales account. This is an example of error of principle. It won't affect the suspense. It won't affect the trial balance. Is that okay now? So now we have the mistake made. So we can do the corrections here. We have the sales. They are cash. Cash, how much? 230. So this one, we remove it here. It's supposed to go to the disposal account. Disposal 230. We are removing then disposal account. Disposal account there, it is coming from sales. 230. So debit sales account. 230. We are removing it. Credit disposal account. That's where it's supposed to go. 230. Being the correction of error of principle in the sales account. So when you check here, the suspense account, when you clear it, it must always agree. If it's not agreeing, there's a mistake. So there is 300, it's agreeing, and there it is 300. So we have cleared the suspense account. For today, we can end here. A reminder for you to be able to understand this video properly. Ensure that you check out for series number 1, series number 2. The series number 1 was on the double entry concept, types of business transactions, common terms used in business. Series number 2 was on entering transactions into the cash book and posting to the ledger and extraction of the trial balance. For today, we can end here. Thank you for viewing or watching this video. God bless you.